Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go into some uranium information that I grabbed from Twitter. I'll give credit to whoever performed the chart, but it's good to get other people's views on what's going on, and they take a similar approach to what I do when looking and evaluating sectors and companies and whatnot. A lot of technical analysis based things and ratios. I'm a big ratio guy. I look at asset versus asset compared history. Then I can determine if something's cheap. I can make price projections based off of ratios. They give us examples of how something is leveraged to a price move in a commodity market boom. I'm going to put that information all on my website, finding-value.com, which is in the description link. What I've got today is a lot of uranium information. And I think uranium's about to, it's about to go. We're getting close. And I can't tell you if we're at that exact moment. We very well could be. What I do is I don't worry about it. I buy what's down. I buy what's cheap. I buy what's within my control, and then I hold on. This move that's coming is going to be massive. Uranium is one of the most leveraged. It is the most leveraged commodity to the price move of any commodity in history. That, like, historically, it's always been one of the most leveraged price moves. We are also coming up into an energy crisis. The energy crisis we can see in Europe with very high natural gas prices, very high coal prices, very high energy prices in general. And it's starting to take a stranglehold on oil. So I think we're going to see big moves in those sectors, and uranium is no different. It's a form of energy, and it's one of the most, it's the cleanest form of energy with the least amount of waste. It has less waste than renewables, because renewables, you have to mine everything out of the ground, which is very mineral intensive, and then you have to dispose of it when it's done. The waste, I don't know if we know how to completely contain that waste after solar and whatnot. Now, uranium does have waste, but we can contain it. We can mitigate it. We have some control over it. So that's a good thing. But anyway, I think there's going to be a huge squeeze in uranium very soon. And we're going to look at some charts. We're going to get a little bit different viewpoints on maybe some price projections. Patrick Karam had one on bad charts, and I follow these guys on Twitter. I also have Silver Chartist here, Steve, one of his charts that I grabbed. So there's the credit given there, and I follow him on Twitter as well. My handle on Twitter is @finding_finance if you want to follow me. Let's dive in, guys. So we've got the uranium to gold ratio. What he says is, despite the uranium's recent outperformance relative to gold and other commodities, it is still cheap on a ratio basis and is expected to continue its catch-up move for several quarters. And I completely agree with him. He's wholeheartedly right. That said, a backtest of the right hemisphere of this arc pattern would not be surprising in the months ahead. So we've broken out of this pattern here. We've done a run up. We might hit our head on this resistance line of the uranium to gold ratio, and we could do a little bit of a return move or backtest move. That is possible. That is possible. And hopefully that's what we get, because I think that we could pick up shares if it were to pull back. And I don't know if it's going to. No one knows the future. We don't have crystal balls. No, we've got steel balls. No, we can't tell the future. But if we do get a pullback, I'd be a buyer for sure. We're right at that resistance line for the breakout of uranium to gold ratio. What he thinks is the potential roadmap to pound U308, outperforming gold by 5x over the next few years. I agree. I'm a huge uranium bull. Looking at the year to date, I said this back in 2020. What I said was we were going to see growth stocks, when interest rates go up, have a headwind. They were going to go down. And then at the same time, we're going to see commodities go up. And a lot of people said, no, it's going to just crash. But, here we are. Here we are, year to date in 2022. ARK, Ethereum, QQQ, Bitcoin, stocks, and bonds have all declined the beginning of 2022. Commodities have separated, and they're not declining. They're going up. Gold, 10%, platinum, silver, uranium, and oil. And at the beginning of the bull markets, I always say, or at least my opinion has always been, that the energy sector would outperform. It is outperforming in the beginning of this bull market. That's where I'm overweighted. I'm also overweighted in platinum and silver because I think they're the next to go. So I like this bottom four here, very much so. I've got the physical metals of platinum and silver, and then uranium's doing very well. I think uranium's going to do a little bit of squeezy at some point and probably outperform oil and become more like natural gas and coal. Now I've got over here, I'm going to zoom in it. It's not a very pretty picture. This is the crude, gasoline, and distillate inventory. And why am I talking about this in uranium? Because it does pertain. We've got, I'm just going to move in real quick. We've had natural gas go vertical. We've had coal go vertical. It's pulling oil, and oil's prices, I think, are going to go quite dramatically to the upside. What I've got behind me here, wow, this is backwards. What I have right over there, facing down, is the inventory that's declining. You can see the deficit that's going down. This is the deficit. We're eating through inventories more rapidly. So at some point, we're going to have higher prices to either slow this down or reverse course to refill our inventories when they get to critically low levels, which they are already at. So I think prices are going to have to continue higher of oil until this changes. At some point, what they want to do is they want to put in solutions that are electricity based. If they want to put in solutions that are electricity based, and you start to run into a crisis of oil where you actually, I don't know if we're going to hit hard shortages of oil in a year or so. I'm not exactly sure, but the prices will go quite dramatically higher. I think we are going to hit shortages of some of the minerals. I think expanding and putting in place these renewables is going to get a little bit more difficult. So I think they're going to turn back on the nuclear power plants that have existing infrastructure already connected. All that stuff's good. When they turn it back on, everyone's going to need a bunch of uranium all at the same time. There's your squeeze. And this stuff is very inelastic to price change. So we could see a very volatile, gigantic move in uranium at some point. That's why I'm just buying my shares. I'm getting them when I can. I'm holding on, and I'm going to sit in it. I'm going to cost average into some of these companies. I'm going to get good positions in them, and I'm going to wait for that squeeze to happen. That's my opinion there, and I just wanted to touch on that with the oil inventories declining. Uranium has already broken out of the short-term pattern here. It's moving on up. It's looking fantastic on a short-term perspective. We could relax a little bit at some point, or we could just blast higher. I don't want to try to become a price predictor. What I am doing is I'm looking at where the squeeze can potentially happen, and I'm positioning for the move. I don't want, one thing that I've done wrong in the past is I've tried to predict prices. Predicting is not what you want to do. What you want to do is you want to position for a potential squeeze in these squeeze areas all throughout the commodities. And what I'm doing is I'm identifying the squeeze. Natural gas, oil, uranium, and I would include coal. Coal is squeezing as well. I will say that I was wrong in the beginning of coal. I should have adopted coal much more easily than what I have. And but they're still down. There's a lot of good opportunities in coal still. So there's still that. Now, Patrick also has a chart that he put on Twitter here recently. I think he did a pretty good job of capturing this move. All the way back to 1980, he's got a lower trend line, a middle trend line, and kind of an upper trend line projecting from left to right forward. We've got some lines going across of some resistance areas that we've broken and really taken off. We've got a resistance line here. We hit here, 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 here. We've broken above it, did a retest, and now we're moving on up of that retest line. What he did is he took the previous, this is a logarithmic chart, the previous price move from top to bottom and projected it from bottom to top and roughly the time frame. The time frame is 2023 to 2026, and the projected price move of this gap over here to the top of this trend line moving forward is $370 to $442. I think that's a pretty good bet. When I calculate the ratios, I get different numbers that are even higher than this. And I have numbers that are kind of ludicrous. They're just history repeating itself. It's basically a ratio against gold. My numbers are more like $600 to over $1,000. of a potential move if gold were to move up higher because of the inflation in the system. So that's a supply-demand compression against gold, and then gold raising it up higher based off of how much money's in the system. That's what I have. Doesn't mean I'm right. Doesn't mean he's right. Doesn't mean anyone's wrong either. Projections are always iffy, but I can tell you this. All our projections are higher than where the price is today. And it's going to take time to turn these mines coming back on, which is going to be a large opportunity for lots of squeezing to happen in this price move. Looking over here, I thought this was funny. Uranium Corgi put this up. It says, "Hi, I'd like a wake-up call." And she says, "You rely on Russia for uranium and barely have enough supply left for 2022. Hang it up. I love that. There's some trading houses that are also raising their either their projections or they're realizing the squeeze that's about to happen. One of the investment houses has said, "In our view, the uranium and nuclear fuel markets are facing potentially the most severe supply dislocation since 05-06. The Biden administration is considering sanctions against the Russian nuclear company Rosatom, which plays a key role in the nuclear fuel supply chain. In 2020, U.S. utilities purchased 8 million pounds of uranium equivalent from the Russians, or 16% of the total U-308 purchases that year. Russia produces 8 to 10 million pounds primary uranium annually, or 7% of global production. In addition, UXC estimates that Russia has 35% of the global SWU enrichment market share by annual sales, and 20% in both the US and Europe." Triangle Investor, another guy, I follow all these uranium guys on there, says, "Still by far most undervalued uranium stocks are the ones operating in Africa: Deep Yellow, Global Atomic, Bannerman, and Goviax. I think among those guys, we will have a paladin of this bull market." Paladin did 1,000x from bottom to top. We're not at the bottom, but these are the ones that I overweighted. I also overweighted Forces. May the Forces be with us. And those are all the African crew that are developing mines in Africa, and I've overweighted all of them. Cantor Fitz, the next leg higher. This is an investment firm. "The next leg higher in uranium price has begun. We are raising our short-term 12-month spot price forecast to $75 from $60. Previously on our long-term price deck is $85 from $75. And then uranium price here, it says, "Aside from the positive financials in the Centrus Energy news release today, we have confirmation that LEU has secured approval of the U.S. Nuclear Regulatory Commission of license amendment to produce HALEU, the first U.S. facility license for HALEU production." So they're going to produce their special mix for uranium enrichment. Looking on the right-hand side here, we've got the new FANG, F-A-A-N-G, image source Merrill Lynch. It says, "Fuels, geopolitical tension, strong demand, constrained supplies, underinvestment. A number of factors will keep energy prices elevated over the medium term. Despite the outperformance of the energy sector year to year or year to date, the sector still accounts for just 3.7% of the S&P 500 market cap, well below the 13.4% weighting in 1990. And one thing I really like about what they did there is that's basically a ratio. They're saying that the money is not there. The money flows have not flowed into the sector. It's flown out. That ratio has showed us that. And the money will come back in. Aerospace. So they like aerospace. They've got agriculture. And then they've got a specific one. Now, I went over the fuels, which I kind of thought energy. But here's nuclear and renewables that they've got. It says nuclear energy has the highest capacity factor of any energy source, producing reliable carbon-free power more than 92% of the time, twice as reliable as coal or natural gas plants, and almost 3 times more than wind and solar. Renewable energy use increased as the pandemic induced major declines in other fuels in 2020. Long-term contracts, ongoing installation of plants, and priority access to the grid underpin renewables growth. So that's the nuclear and renewables. Moving on over here. Oh man, it cut it off. Anyway, I had some other charts here showing natural gas. I don't know why this isn't showing up. It must have cut off the bottom of it. But anyway, looking at this, I was going to show the comparison. I'm not going to go back. I was going to show the comparison between natural gas and uranium. Natural gas's price movement had those couple of humps, and then it just took off, and it was sloped upward. So when you see these large kind of movements, they call it a barrel pattern. Jesse Livermore had it. He noticed it. Uranium is exhibiting that same movement. It's positioned upward on a long-term chart, and it's starting to do that barrel movement where we're about to, I think, explode higher at any point. What I'm doing is I'm positioned in my companies. I haven't sold a single share of anything. I'm overweight the African crew, the Bannerman, Deep Yellow, Global Atomic, Goviax, Forces Metals. I did buy some Paladin Energy recently just to have some exposure to it. I do have a couple ones that have a little bit overweight exposure: Fission Uranium, Next Gen Energy, and then I've got a bunch of the exploration companies. I overweighted one exploration company, which is Baseload. That's my favorite one. And those are kind of the ones that I've overweighted. I've been long-term holders. Oh, I overweighted Encore Energy as well. I've got an okay position in Uranium Royalty Corporation. I don't think it's as big as my other ones. Remember, these are spread across like 6 or 7 different portfolios. And some of them I don't go in often because I don't add money to it. So I kind of just leave it. And that's how you become a good investor. You just leave it. And you pick right, you get it there, and then you sit tight and you wait for the conditions to change and the ratios to change. We went over the ratio changing. It looks like it's coming up. We've got a resistance line right ahead of us. We're going to break through that. And when we break through it, we're going to have some fun times in the uranium sector, I think. We're going to see these mining companies get their stride back and be the cheetahs that they are. And I'm super excited. I'm a little bit nervous, mostly excited, nervous that, it's kind of like looking at a vacation that's coming up. And the fun part was the run up to it. The run up to it where you can accumulate, you buy all your stuff, you basically assimilate this portfolio for a vacation. You're waiting for this thing, you're looking forward to it. And then when the vacation comes, you get a little bit nervous because you're like, man, this is like what I've been looking forward to. It's like the thing that I've been striving to buy, the thing that I've been positioning for, all the hard work, all the research and stuff that you've put into the companies is all coming to fruition. And it's kind of like the beginning of the end, so to speak. And even though it's not, we've got a long bull market ahead of us. But I'm very excited for this move. Hopefully, I pick the best companies that have the most leverage to the price move. I've done a pretty good spread. I've done a spread on it. I've got a good spread on it. I can't remember what that's from. It was a comedian that said it. Bill Burr, I think. It was Bill Burr. That's where I got it. But yeah, I've got a good spread across all these different companies. I think I'm positioned quite well, and super excited for this move. It's coming, guys. We could have a pullback. Now, if we get a pullback out of this, if we do, consider it a gift if we get one, because we've got a nice, good surge here. If we get a small little pullback or something, I'm going to take advantage of it. I'm going to be a buyer in uranium. And, I bought this last pullback. I went in kind of heavy. I get it. I am overweight oil, and I'm overweight oil, natural gas, and uranium. Those are my 3 big ones. I do have precious metals, but they have whittled away in comparison to these because they've gone up so much. So my percentages are now more overweight uranium, and I continue to add to uranium. And there's a couple of companies that I'm sharing on the finding-value.com website that I'm looking at to accumulate even more. So I've been switching between uranium energy service companies. There's some shipping companies that I like, and some other ones that I've just kind of been funneling into. It's not the large amounts that I originally started with in oil and uranium in the beginning, but I continue to add into those. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.